So tagging into last week's video on thinking about trading like a business, I got some really great feedback, mostly from email, some comments on the site, and it really hit me that I left something out. So I'm sorry. But I think inherently you might know this. The idea being opportunity cost. When my account was very, very small and I wanted to think like a business person, I had limited capital, I had limited resources, which meant I had limited margin. And I tried to crank that to the nth degree without being fantastically stupid. Just to reiterate, I took like 3K and put that in stocks, and staying with blue chips, I could trade, under Reg T and enhance that like it was six. They didn't really have day trading buying power then, and two, it was too expensive to day trade. The futures margin, like I said, it dealt on notional value, so I was able to take like 5, 6K and trade it like it was somewhere between $35,000 and $50,000, depending on what instruments on the futures side I was trading. Prices were much much lower. Volatility seemed to be much lower, and therefore the margins were lower because that's really what it's based. The margin is based upon. So then I thought about like, okay, if I had to be highly selective because as soon as I committed capital, it tied up resources. So I immediately started thinking about opportunity cost. What is the cost to me, right? Because there's no such thing as the free lunch, right? Isn't Milton Friedman? So I used to think to myself, if I put this money down, what opportunity am I missing out on by making this choice today? So I learned how to be highly selective. And it wasn't from reading charts. That's not it. Because oftentimes you're not going to even see it there. I got it from looking at the data and understanding that sometimes these moves, they don't evolve right away. They take some time to kind of gestate and then they kind of become ripe for the picking. So I learned how to not have a sniper entry, but learned how to sit on my hands before I put on the trade. I learned to sit on my hands while I was in the trade, right? And let the thing move as fast as possible. So if you want to judge your own trading that way, right? Because you can be the judge and jury. I can't judge you on what you're doing. I can only try to help you. That's the whole point of the channel here, right? Everything that comes out of my mouth is really to help the viewers, and it is largely autobiographical. So I don't remember the time, but 30 years ago, the total return on the S&P was 12.25%. So call it 12%. So that meant basically, if you rule of 72, if you had X amount of money invested, your money would double in 6 years. 12 goes into 72 six times, and so outside of taxes and commissions and fees and this and that, if you had them, that buy and hold at 12% would double your money in 6 years. So then the benchmark you would use if you were going to trade would be net of commissions and fees and also taxes, right? Because you have short-term capital gains. Some of you, if you're trading in taxable accounts, you want to look at that net return and say, okay, if I'm only making 5% net for all my work, although the returns from neither my trading nor from passive buy and hold, S&P 500 stuff is guaranteed, the odds are in your favor if you can do it for 10, 20 years, that you will make money. So that's what I benchmarked my behavior against. Was I knew I could get 12% if I just bought and held and put my head down and started raising assets and did the marketing thing, which I had to do on some level anyway. But the question was, what am I doing with my money today that I would outperform buy and hold? And in trader speak, portfolio manager speak, they think about this concept of alpha, right? If the market is beta, then what you bring to the table above and beyond buy and hold, right, through all the choices that you make or don't make, right? Because sometimes the best trades are the ones that you don't pull the trigger on. That's the alpha. It's the difference, the mathematical difference. So then when you think about that after taxes and after commissions, if that's an issue for you, you have to figure out what makes sense. What rate of return for all the time, money, and effort that you're going to put into this, what makes sense for you to even do this, right? That's why I never discourage people from trying to scalp or to do, sell, buy or sell zero DTE options, because I'm not a dream killer. If that's your whole goal in life, then by all means, you have to try it, because you're never going to know until you actually try it. What I do encourage you to do, though, is to keep a journal. It doesn't have to be a diary, and it doesn't have to be anything more sophisticated than a Google Sheets, but to, log your hours, log in your study, log in your preparation, keep track of your time, And keep track of your P&L. How much are you adding into your account, every week, every month? In cash deposits, what is your account growing to? And keep track of your hours. So that this way you have a very black and white understanding of your progress or not, or lack thereof, right? Because it's not putting a stick in your eye, but what gets measured can get improved upon, right? So you have to be honest with yourself. I'm not going to try to hold you to a certain standard. I'm just here to help. You have to hold yourself to whatever standards you want. But you do need to kind of, I think this is where people don't measure it as a business, is they're like, yeah, I'm still plugging along, trying away. And that's kind of flaccid, right? That's like, no one cares if you're trying hard. That's not how the market works. You don't get rewarded for being a good guy. You don't get rewarded really even for having a strong work ethic, because we get paid to execute. And so you have to execute or not. And if you can't, then you either can find someone else to do it, or you have to change the parameters of what you're doing. Case in point, if you are trying to trade on shorter term time frames like scalping, and after say 6 months you're just not getting it, there's a chance that you just might not have that feel that you would need to really excel in that super hyper short term space. 1 minute bars, 2 minute bars, that kind of deal. By all means, try it, because if you can catch a knack to it, then you can really kick some ass. I know some guys that can do it. However, a lot of folks who try it, they don't ever get that feel. And they're in discords, and a whole bunch of times go by. A lot of time goes by with no results. So then you're sitting there saying, man, how come this isn't working? Again, we come back to opportunity cost. What did you miss out on, right? If you could think about being in some of the bigger moves, whether it's SMCI or even having like 10 shares of NVIDIA, it's not sexy, but that's the opportunity cost that of what you didn't do to try to make it as a trader. And I'm not trying to crack you upside the head either. That's not the point. But this is how you go to school on yourself, because you're probably a team of one, just like I was. And I didn't have any of these resources. I didn't know what else to think, because there was really no one there. So that's what I would do, is I would benchmark things against like the S&P, or things that you could have done that you didn't do, because that's what you missed out on. So think about it this way. If you have 10K and you're down 2,000, so you're at 8,000, you're trading 80 cent dollars. But if you took some of your money, even $1,000, and put it in NVIDIA at 505 when it broke out months ago, what would that have grown to? Maybe 12K. I don't know. Depends on your position size. So now the gap is 4,000, because you could have had 12K with buy and hold, or even putting some of your money to buy and hold, right? With the S&P in today's date kind of being close to historic highs. Doesn't matter why. And so if you're down on your equity, but your equity from buy and hold would have been up, that's a big gap, right? And so now you're behind. So that's the kind of scorekeeping I used to keep. It's like, okay, buy and hold. I was down. Now I need to see 50% to kind of catch up to what I could have done if I just bought and held. And that's the reality of it. It's sometimes not pleasant to look at. The other thing you can do, because I'll give you this to chew on, if I always said, like, as far as my own coaching or mentoring, it's more consulting than anything. If I do my job right, I make myself obsolete very, very quickly, right? There's no reason for us to be in business for 12 months. If that's the case, then I have completely failed you. You know what I'm saying? So I put a big premium on guaranteeing results to people, but they have to do the work, because I don't want to be involved with them for 6 months period of time, unless that was the engagement, like once a month or every other week or something like that. So I want to push the birds out of the nest, so to speak, because as soon as you can stand on your own 2 feet, you're going to go parabolic. So if you're one of those people who are in the discords and you're not making progress after whatever 3, 4, 5, 6 months, maybe some of the folks have been doing it for 2 years, unless you can show the P&L is a direct result from what you're getting from that, the opportunity cost there is like, well, if I took my $100 or $200 every month that I'm putting into this Discord, and I added that to my account, right? Because just because it's a trading account doesn't mean you can't add every month to that account to grow it as well. I would do everything possible to grow my account. Sometimes I'd put in $35, $50. Why? Well, because at that point, $50, $60 was 1% growth. And it was also the intention of it. I was showing the universe, like, I'm going to make my account grow. Any way, shape, or form. Legally, of course. So keep that in mind when you're kind of doing your own bookkeeping on yourself and keeping track of your time, money, and effort. If the time, is kind of getting beyond 6 months, you might want to pivot and extend your holding periods. Likewise, if you don't have the stomach for holding overnight over the weekend, try to think about swing trading, over a couple of days to see how that works. But again, just remember what gets measured can get improved upon, and you have to be judge and jury on your own behavior. If you like this video, check out this one.